Welcome to Founders Unplugged, hosted by Greg McCallum. Long-form, honest conversations with founders and entrepreneurs from around the world.
Morning, Greg. To introduce myself, my name is Toby Kernon. I'm the CEO and founder of Wagonex. We are now probably the longest standing car subscription or vehicle subscription business in the UK and arguably the world. We work with lots of big and exciting names in the space and trying to make the most of what we do and our wonderful SaaS platform.
Brilliant. Nice. Straight to the point. I like it. Thank you, Toby. I really appreciate it. And it was great. We actually met at the demo day, wasn't it? I think it was was that last year? No, when was that? No, that was earlier this year, wasn't it?
Earlier this year, I think.
Yeah, that was it. On a panel, wasn't it, that I was moderating? How did you find that event? I thought that was awesome.
It was good, really good. Amazing that they were able to get so many people there at such short notice. And it was really good to talk about our journey and our investment journey from almost an objective viewpoint and not be talking about the business and trying to sell what we do and talk about how amazing subscription is and embedded insurance and all these other things we work with. So it's nice to actually try and help those in the audience because it seemed a very engaged audience that seemed very interested in understanding all the different nuances of, seed, pre-seed, pre-Series A, Series A. So, and it's a difficult world out there, particularly these days.
Yeah, I can imagine you don't get much of an opportunity to speak like that about the various aspects of being an entrepreneur and your journey, right? It is, you're in sales mode, you're in pitch vision mode constantly, right? Especially because you've done so many rounds. I mean, that's pretty much ingrained into you by that point, right? So
yeah, and it's a full-time job, founders, and I think it can be underestimated just how much time it takes a founder out of the business, or it just extends your daily hours way into double figures, early teens, sometimes high teens. So it's a tough world. And it can be quite lonely for founders. So it's good to get into that environment where literally most of the audience seemed to be founders that were in the early stages of raising money. So it's good. It was a nice event.
Yeah. And like you said, really engaged, right? Everyone there really wants to learn, which is awesome. Well, I'm glad I met you there, and I agree. It was a great event and great to be part of it. And he's doing it again soon, so that's exciting. But could you talk me through like your journey then? So, prior to Wagonex, what were you doing before all of this craziness? Because how long has Wagonex been going now?
Wagonex was 8 this year.
Oh, really? Wow. Okay.
It was founded on the 4th of August 2016, 3 months after my third child was born, and he now reminds me that he's 3 months older than Wagonex Daddy. So it's a nice and seemingly constant reminder from an interested 8-year-old.
Mm-hmm.
And before then, I've been around for quite some time. I've been self-employed for the best part of 25 years in various different guises. So I started my my working career in an aircraft hangar-sized building with about 10,000 people wearing funny coloured jackets, waving their hands at one another. So it was an open outcry trading floor, which is they don't exist anymore. I've had 6 years there, working within the more complex side of that world in structured options, financial options. And left there in the late 90s, did a bit of traveling and came back and eventually backed myself to trade various different products for about 13 years. I was often thought of as, you're working for a bank, you're a trader, you can't possibly work for yourself. But it was a really niche environment where there are about 300 of us who managed to, and it was all really heavily leveraged. So it's not about me putting down millions of pounds, which I didn't. It was, you put a small amount down, the company teaches you how to do it, and you build on that. And if you can keep going, you're doing very well. And if you can keep it going for more than 10 years, you're doing extremely well. So But it was always a really, really stressful way of making a living because, I could have gone and got a job, a proper job, let's call it, and probably earned the same amount of money for less stress. Some months you lose money, some months you make money, some years you don't make any money, and some years you lose money. So it's a very volatile way of living, potentially hand to mouth, and it got harder and harder as we started a family. My wife was also self-employed, so with two young kids, then going to school, it became harder and stopped being fun. But then I started looking at the world of startups and just trying to see what life after trading may or may not look like. And bizarrely, I started to look at different things that would keep me away from trading and keep me busy. So I took up triathlon, obviously.
Of course, right? Yeah, that's as one does.
Yes, one does with two self-employed people, two young children. Triathlon was obviously the answer.
Yeah, just a small, not too complex hobby.
And I blame the Brownie brothers. I was sitting on the sofa watching the Olympics with, what was that, 2012. So my son would have been 5 and my daughter would have been 2. And it was supposed to inspire a generation of young athletes, not middle-aged men going out and buying a racing bike and dressing up in lycra and going out at 5 o'clock in the morning to try and do some laps around Regent's Park, which is effectively what I started doing. And then one year, that year or the year after that, I did something on the lines of 15 different events of Olympic distance triathlons, half marathons, and goodness knows what else. And found myself, it actually got me a job as the COO of a sports social network. And my move into the world of startups began. So,
So at the time, that was a startup.
Yes, yeah. I mean, they were. It was a single founder put the money in to start the business, and then I joined and actually managed to raise funds into the business to match his investment, that was my early foray into early stage investment, and we applied for advanced insurance to get the EIS tax relief. And the new investors coming in, and we built the business. It was a difficult time for a sports social network, with all of the other social networks really booming at that time, and the founder found it really difficult to continue and decided he'd had enough. So I took over the business for the last 3 to 6 months and just ended up working with the shareholders and the board to wind it down. So it was a big lesson in how to raise money, the mistakes that were made within that business, some of the decisions the founder made, and then winding the business down with credit to shareholders. You almost saw the full life cycle from start to finish and all the different journeys within
speed run
the
whole thing, really.
Exactly.
And also, you went into the deep end with a social network, right? The one startup everyone says not to do. Like, so
I know.
Seem to like doing things the hard way.
Yeah, no, it's a running theme. I do have seemed to have made a rod for my own back,
right?
In every single part of my career since the late 90s. I think if I could go back 25 years and take the job back that I had working for a bank in.
Yeah, but you say that, but it's baptism by fire, right? I mean, like you said, the amount that you get to learn in such a short period of time that way is intense. And I also imagine the amount of the network that you build in such a short period of time as well is incredibly important, because as we know, in this business or any business, it's an incredibly important thing, right? Especially when you're raising money.
It really is. And I mean, and that it was a stepping stone into something else, because some of the investors saw I've been able to deal with the business and wrestle with the difficulties, every single difficult aspect from that a business could have at that stage. And I was offered a job as a consulting investment director at an EIS funding platform, where I stayed for about 18 months and during that 18 months, the itch I needed to scratch for Wagonex, which was born when I was sort of 17, 18, sort of came about.
All right, so that idea had already been about with you a long time ago.
Yeah. Years and years. It was just the frustration with buying cars. I mean, the first bit of advice my dad gave me was, save up and buy a house. So I saved up and bought a car, and then I bought another car and another car, and just kept rolling the cars. But you knew that you were losing money on the way in, on the way out, and it was always the house always won. And it didn't really feel very consumer facing and very flexible, and you were you were taking out interest-bearing debt on a heavily depreciating asset. It was just, why would I do that? And then sort of fast forward 6, 7, 8 years, the realization is actually Dad was right. I should have bought the house. So yeah, I managed to be fortuitous enough to be able to buy a flat when I was 25, but kept obviously rotating cars because that's one of my, I guess, passions.
Is it also maybe something that is expected for you to do as a trader? Right? Is that a culture thing, like in that world to an extent?
No, I think possibly for some. I mean, the guy, one of my long-standing great mates who I sat next to for years, couldn't care less about what car he had and kept the same car for 10 years. So
Right.
I don't think it's necessarily a cultural thing. And none of them were particularly flash cars. It wasn't as if I was buying Ferraris and Porsches and Mercedes Sports and things like that. Like, it's a nice car, BMW, Mercedes. I guess the Cherokee Jeep was the most.
Always got to have a fun one, right? So that idea had been with you for a long time then. So then what was the moment or what happened that made you decide to start acting on that idea? Because if you've been holding on to that idea for some time, what was it? Was it just that accumulation of experience and contacts and everything that you said that just sort of made you go, do you know what, now would seem to be the right time? Or did something specific happen?
There was a couple of things where leaving trading was a hard decision to make, although it was brutal for the last 2-3 years, because there was a time where all of the hedge funds and big banks stopped hiring more traders. They started hiring more engineers and more sort of black box style trading, where they started off with 500 traders and 50 engineers, and ended up with 100 traders and 400 engineers. So it was more of a focus on computer generated trading. So we became cannon fodder for the black boxes of very wealthy banks. So and coming out of that, it was obviously really challenging personally and financially. I managed to, my brother-in-law was quite a well-known investor, and they happened to have a friends and family deal on a deal with Ford, where you could have a different car every 6 months. It was all included, and it was one bundle price, and it was discounted for friends and family. So we tried it. We rented the car, and for 3.5 years we had this particular deal. It was only sort of a VIP style deal, and I was thinking to myself, why can't we make this accessible to everybody? This shouldn't just be for VIPs. We should be able to do this across every single make, model, and variance of every single price point, and it should be tiered and all inclusive, and we should be able to talk directly to the manufacturer and the insurance company.
Hi, a friendly reminder to share this episode with your network, like and subscribe. And if you are feeling really supportive, please consider reviewing the show on the podcast platform of your choice. It all really helps support what we do. Thank you. Now back to the show.
And the idea just kept building and building and building. And within the role at the funding platform, I bumped into a venture building company who were actually had an office almost at the end of my road so I went to chat, and it was outsourced full stack engineering team. It was a pretty reasonable rate. They get you to MVP. Some of my work in investment, so I was able to help them with some things, and I got a sort of discounted rate, and they gave me a desk for 9 months. So it was that sort of kickstart into getting the platform to an MVP. They're still to this day, 8 years down the line, we still work with them from time to time. They remain shareholders in the business. They're hugely supportive. And that's one of the best moves I made for the business 8 years ago. We had MVP live in 6 months. Actually managed to roll into BMW's head office with wireframes, which was
oh wow!
I guess your stereotypical startup founder story.
Yeah.
look at this platform, yes, it's live, and we can transact
Yeah.
with Figma wireframes and so all of this functionality that the platform could do, and going back to the CTO, can we do this?
Yeah.
Which seems to have been a running theme for the last 8 years, so trying desperately not to overpromise.
Yeah,
So I'm
I
getting
think
much better.
most founders are familiar with. Yeah, yeah. And then, so, I mean, yeah, that must have been a bit of a challenge. I mean, getting the suppliers on board, because of, what point what did you need in order to, like, what stars needed to align for you to be able to launch? Because of, like you said, there are quite a few moving parts to a platform like this. You got to get the suppliers on board, insurance, and a few other parts. So what was that? I mean, was it the case that you were just trying to get people to say, in principle, we would, and then you had to go and raise money, or were you able to launch with a few and then raise money? Like, how did you go about that?
So, good question. We had MVP, and actually, it wasn't just me having a frustrated idea, thinking that actually we should be able to do this. And if Ford could do it for VIPs, I noticed there were a couple of other companies that would do it on a really small scale. One of the main clinchers was, I noticed there was one or two companies in the US that were looking at car subscription and flexible leases, which still to this day is a bit of a struggle in the US, but it's coming. There's a big focus on leasing over the last couple of years, so that's a good thing to see over there. But we needed not only needed supply, and not just a few sporadic cars here and there. So we started with a few small suppliers. It was a handful of cars, but it's quite it's a massive industry in terms of volume and value. It's quite a small industry in terms of players. So particularly in this niche as it was 8 years ago, where there were only one or two people looking at this. So we needed to have support from a manufacturer, and most importantly, support from the insurance company. So in the first couple of years, it was myself and probably a lot of tumbleweed in the UK, with one or two people looking at it in the US. And we managed to secure a deal with PSA Finance in December 2018. And coincidentally, in the same month, we secured a deal with an insurance company. So that was, that was over 2 years in. We'd raised a couple of small seed rounds to get to MVP, to get to a point where we had a number of cars on the road. And we actually managed the deal we did with PSA Finance, we managed the vehicles, but we didn't take any risk on the assets, which I think is key for a business like ours. If we start taking risk on any of the metals, so anything that's heavily depreciating, or even the utilization risk, so the monthly, some companies go on risk to pay the monthly price back to the supplier. So I wanted to make sure we didn't do that. And the deal with PSA Finance and the new insurance company worked well for 2019, and we actually saw some growth in the space and a lot of interest in the space, which was brilliant. And we started actually seeing competition, which from a position of me and tumbleweed, to see competition coming into was great
sign.
Validation.
Yeah,
exactly what we do. And fast forward to where we are now, the competition is fierce, which is phenomenal. And then the 2019 was good, and then we all know what happened in the first half of 2020, and it's been a bit of a bumpy ride since then, and we're starting to see it really grow over the last 18 months. So it's good signs.
Yeah. So prior to securing those deals, were you were live by that point? You say it took a 2-year sort of period to get that, but you were live. You had some sort of subscribers, you had customers. But how were you going about getting those early customers, especially for a platform like this? Was it the case that the investment that you were taking on board, just there was an enormous amount or a not insignificant amount put towards marketing, or was there a lot more of a direct approach to trying on board users?
It was very much, it was partially direct, partially marketing. And we were so early in the space, the SEO was, we were top of Google car subscriptions in the UK, singular, plural. So anyone that had any inkling around car subscriptions would find us quite easily. Today we're on the front page, sometimes we're top, sometimes we're fourth. So we're up against Renault, Jaguar Land Rover, Nissan, and some independents that are well funded. So there's a lot of jostling for space, a lot of spend. So cost per click's gone up quite a lot. PPC remains a focus. Our organic has always been quite good. But in those early days, it was, we had MVP, we were proving a point, getting a few cars on the road, getting a few customers in. Sign-up seemed to be really quite easy to find in those days. Conversion was a struggle. Then conversion rates remains a struggle to some extent, even now. So it's a high value item. We often get customers that come through, start the journey and go through the end of the journey on first visit. So it's those challenges remain, but we're more experienced these days.
And then, like you say, so the actual platform itself, the service itself, let's say, it's leasing, but then with that flexibility, like you mentioned, that you saw previously, so presumably, various price ranges or packages and tiers, but then also that ability to get a new model if you want to, and to swap in, swap out. So it's got all that. And then what about sort of in terms of either picking up or receiving the vehicles themselves? How does that work? Because I know that some, do the whole drop-off service, whereas others you pick up from a local dealership. Like, is it a blended sort of version of that, or is it one or the other?
It very much it varies a huge amount. I mean, we don't take any responsibility for the vehicle or the delivery of the vehicle. We provide a SaaS platform and an insurance product and some marketing for our partners. So our partners are responsible for the management of the vehicles and the customers and delivery of the vehicle to them.
So
and
it would just depend on that specific partner and what they do.
So we're very much an enabling business. So we provide our partners all the tools they need to be able to transact and manage their customers in the way that they either do now or that they feel that they want to.
Mm-hmm. Okay.
We support with the insurance side of things, which is the most complex part of our customer journey, and being able to offer a personal lines insurance price from the Admiral Group is a pretty formidable thing to be able to offer.
Why is it the most complex part? What makes it so?
I think hooking up the API to the pricing engine of an insurance company that has 6 million customers and however many hundreds of millions of pricing matrices is quite undertaking. It took us about a year to get it right.
Oh, really? Wow. Yeah.
I mean, previously the pricing was automated with a previous provider, but there was a lot of manual work that went on in the background. It's a major undertaking for a business like that to be able to do that. How
did you feel during this early period? You're talking about these quite long periods of time before significant milestones are met. Like, how were you feeling? Was that what you were expecting? Was a lot of it kind of a shock that things maybe were slower in some areas, faster in some areas? Like, what was your general?
Well, what a question. There were some dark days. There were some really happy days. I think the realization that we were going into a world where not only are automotive companies very slow-moving beasts, insurance companies are even slower. Having patience was key. A phrase I've used for the whole 8 years, and it comes out every now and again. And I think, actually, some of our team are probably sick and tired of it. Is making sure you've got the confidence to be calm, and that's come from 13 years as a self-employed trader. You almost feel that you're unemployable by anyone. But we did a huge amount of work in NLP, performance coaching, seeing a performance coach twice a week, and there's deep learning of being patient and understanding that. I think I remember the exact ratio. But if you talk, another parallel is cricket.
Right.
Where if you're a batsman, you have one chance, and no other sport is that brutal. You get one chance, one ball, and you're out, and you don't get another go that day. Joe Root, best British batsman ever now. I think he said he fails 3 and 4 times. So it's understanding that the strive for perfection is detrimental to your learning, and you're going to fail more times than you succeed, and being able to sort of take those body blows, take it on the chin, and have those broad shoulders to be able to weather weather the storm. And we've had to weather a huge amount of storms. It's not just us. It's running out of money. The conversion rate for getting investment is probably in single figures. So we've got 30 different shareholders, just under 30 different shareholders. And if you go on a single figure conversion rate, do the maths and work out how many investors you need to speak to get 30 people to agree to invest in your business. You have to take a huge amount of rejection. So it's, you have to be able to demonstrate a large level of resilience. And that doesn't come easy. It doesn't come, you don't necessarily born with it. It's practice. And I guess you learn from all of the rejections, and the next time it becomes easier. It's never really easy.
But it's interesting, isn't it? Because the reality is often very different, I find, from what could be taken from what people say, right? Which is that there's people so often talk in the startup world about moving fast and breaking things, right? And it doesn't really seem to really capture, in my mind, what the reality is of a startup, which is there's a lot of stopping and starting. There's a lot of running a marathon and then stopping and having long stretches of needing to be patient, and it's really, at least from my perspective, I'd be curious what you think of this, but really it feels a lot of the time that as a CEO or even as a founding team in general, you're spending a lot of your time waiting for those moments where the starter pistol is fired to then work fast and break things. Really, It's not all systems go all of the time, right?
No, and I don't necessarily think it's working fast and breaking things. A business like ours, it's a B2B SaaS product, and we have a consumer-facing marketplace, but we are almost largely reliant on the decision-making processes of big businesses. And even when we sign a contract, we get a green light to do certain pieces of work. If we move fast and break things, we could be seen to be reckless by those partners. I don't necessarily think we need to move fast and break things. I think if we do break things and we push things to the limit, we need to learn quickly. But I think the more of these companies we are becoming more embedded with, the more heavily compliant driven they are, the more financial, the more regular.
So it just really depends on your business, really. At the end of the day, that dictates the free, the level of freedom. Let's say you have to do that, to go out in the world and try and move fast and break things. At the end of the day.
I think whatever speed you're moving, whatever you break, whatever you learn, as long as your decisions are based on data that you can justify and you can measure and you can justify the assumptions that you've used in order to make those decisions, or change what you're doing, or change a consumer facing part, or whatever, then I think you're on the right lines.
Yeah. It's interesting, isn't it? Because I take great issue with it's a bit of a contradiction for me, but I take great both pride and contradiction and issue with the startup world, and how the community itself can give out so much information and it's so willing to help, but it can also be incredibly confusing, I think, for early stage founders, because of it's quite often given out to be this one size fits all kind of pieces and chunks of advice, when it really is very, very specific to that individual, their experience, their background, and their startup and what they're looking to build. And so those little sound bites of advice can just put people down the entirely wrong path. So often.
I completely agree, and we've had some great advisors along the way, but we've had some that have been detrimental to the business and some decisions. So it's very much there's a large element of luck involved, and there's a famous coach in Lombardi was saying, "Work where I get," something that I refer back to quite a lot, where there's a large element of luck. People that you meet, decisions that you make.
But you see, that's a really interesting way of looking at it, because if I'm not a huge believer in luck necessarily, but I do believe that you make your own luck, in the sense that just the more rooms you're in, the more chances are you're going to meet the right people, right? That's essentially what it comes down to. Putting yourself into those different situations. But do you really think that has a part to play? To some extent. I mean, or are you not really just creating your own your own luck.
Yes, yeah. I mean, and that's essentially what the saying's referring to, isn't it? The more people that you meet, the more things you do, the more you speak to, the more. The more I try and make a point of going around and meeting our partners face to face. There's so many of us spending so much time on Zoom or Teams or Google Meets where, it's I think becoming a bit underestimated how important it is to meet people and go and see them face to face, because the amount you can cover in an hour face to face will probably take you 10, 30-minute Zoom calls to get to that point. So, I think it's...
Well, and there's the relationship side of it too, right? Which is incredibly important, because it's only when you're breaking bread with someone or, grabbing a coffee or having a drink, a couple of drinks that, people start coming up with things outside of maybe the agenda of the meeting, right? It's like, what, maybe I should introduce you to Paul from accounting. He's got some good idea. You know what I mean? Like that's when this crazy sort of stuff happens,
and it takes an effort to do that. It takes an effort to. I mean, some of our partners are all over the UK, and some are now.
If you are enjoying this episode and want to support the show, please like, subscribe with notifications turned on, and let us know your thoughts and opinions in the comments below. This lets YouTube know we are doing something right. Back to the show.
In North America and South America, so we're working on plans of actually how do we get there? How do we make the most of going and seeing new partners? It's extremely important to make that effort.
Yeah. So when this is, and you don't have to answer this question, but I think that I'm definitely curious, and I know people are too. Yeah. But but when did it become profitable for you as a founder to be running a startup? Because I think that's a question that a lot of people, given that how long things can take, right? And like you said yourself, that some of these various milestones took time. You're 8 years in now. Presumably, it started at some point to actually allow you to live your life, to pay the bills, right? In a way that maybe felt more comfortable than, say, the super early days where you're paying a salary from, the investment you've got. Like, when did it, or maybe it hasn't, I don't know, but when did it start feeling comfortable, let's say? If that's the right word, I don't know. Maybe it doesn't feel comfortable still.
I'm not sure comfortable is the right word. I don't think it necessarily feels comfortable. We've still got a lot of work to do. We've got some phenomenal partners that this year, next year, the year after, there's a huge amount that we would do with them. I have a salary. I can just about pay the bills, I think. My wife also works. She's also a founder. So we have...
oh, really?
Yeah. So we're 2 founders, 3 children, and now a dog, obviously, because
of course
life wasn't complicated enough. So we 6 months ago agreed.
What type of dog?
It's a miniature poodle.
Oh, right.
She
okay.
is.
So not a real
is
dog,
a miniature poodle. No, it's really not a proper dog. It's a very pretty dog that suits our 14-year-old daughter very well, and it's very much something that it was intended to help with her well-being for a far more complex reason. But she's good. Good fun. She's not here today. She's I've been asked to leave the house so that I don't have to run downstairs to stop her from chasing foxes or pigeons or barking at the postman.
It's always the little ones that go like that, isn't it? Like my German Shepherd's wandering around now. He couldn't care less about any of that stuff. Do you know what I mean? But it's always the little ones that are like straight in there for the foxes and the birds and everything else.
It's that Napoleonic syndrome.
It is. Yeah. It's crazy.
Oh dear. So where was I? So we are okay. It's you're as 2 founders, 2 startups in a family, and actually we've both been self-employed ever since we first met. So we've always lived hand to mouth to a large extent. And any business is only ever really one really bad decision or one black swan event away from going under. So I don't think you're ever really comfortable. I think we do have a corporate venture company on our cap table who have extraordinary deep pockets, but it's a venture investment from them. They're not a charity. We need to get on with what we're doing. We're not part of their group. We're an independent business. So,
and it's not free money as well.
No,
right? You're still
absolutely
giving
not.
away
But even then, even if we, if you raise a 5 million Series A, you're not. I don't think any more comfortable than you were, because you've got increased targets. You've got
Right.
another very big, very ambitious shareholder who wants a multiple on their investment, and you're now one of potentially 10, 15, 20 portfolio businesses that they're all focusing on. So I think that the comfort levels probably, or the discomfort probably increases as you take more investment. Or I've found as you take more investment into the business and you've got more shareholders you need to answer to, and our shareholders are FTSE 100 business, so the levels of reporting goes through the roof, and the levels of information that we present our board and that we provide on a monthly basis is far greater than I would have, and than I was expecting. But it's great learning, great lessons. They report to the stock market once a quarter, and their internal corporate governance is through the roof. So I guess puts our understanding of that level of corporate governance at an increased level. But I think if we were to look for that level of comfort, it would probably be some form of trade exit, I suppose, or potentially selling 51% of the business to one of our partners to then grow with them and leverage the scale that they have. I would imagine that would offer a business a certain level of comfort. But I think, unless you become a Revolut or a Monzo, massively well-funded, consumer-driven, highly profitable listed business, I think I'll be comfortable.
Well, like you say, I mean, I think even then, there's comfort is an odd word, but I did use it quite intentionally because of, I think, of how it can be interpreted in this conversation, right? It's
I want to be comfortable,
right, and you say that like Revolut, Monzo, etc. Like I'd imagine they're pretty uncomfortable still. That's an enormous.
Yeah.
That's to have a business that large and with that much riding on it. Even still, it's the bigger it is, the harder it can fall, right? So
I think I don't want to be comfortable. I think I'd be bored being comfortable. My
right.
daughter asked me a couple of days ago, when are you gonna think about retiring? I said, I'm not. So what do you mean? I said, I don't want. Why would I stop working? And she was asking me because my father, who's an entrepreneur, he proudly used to say to me as I was growing up that he hadn't ever worked for anybody. He became qualified and set up his own practice, grew the practice, sold the business about 15 years ago, and he's now a consultant at the business he sold his company to. So he hasn't ever worked for anybody, and he still does 3 days a week, and he's 78, doesn't want to stop. Enjoys it too much. I'm like, well, yeah, I'd be bored. Happiest either at 100 miles an hour or with my back against the wall or something with a challenge in front of us that needs to be managed or solved, or we need to do some quick thinking around certain things. So it's
where does that come from, you think?
I often joke, and it's happened more recently, more from the last 2 or 3 years, that if someone tells me I can't do something, it's probably the worst thing that they could say to me. I always have to plead with people to please don't say that I can't do that. And it comes back from when I was a teenager. I think dislike of authority, or as soon as somebody says you can't do something, I see it as a challenge. A bit like the triathlon side of things, where sitting there watching, having not had surgery on my knees, in both my knees at the same time in 2000, and hadn't really done any sport, just played some golf here and there. Sitting on the sofa in 2012 thinking, well, I can run. I haven't had a bike for 15 years, but I could buy a bike and I could learn how to do that. And I haven't swum since I was in swimming classes when I was 10. I can do that. It's just, I don't know what it is.
Well, do you spend like your younger years were you being underestimated quite a lot? Was that it?
I don't know. I haven't ever really dug into it that much. I didn't really enjoy school. Didn't really enjoy authority at school, I suppose. My careers. I've got a 17-year-old who's going through his career options, university options, and come back with lists and a plethora of bits of information on what he could do, what he might think about doing, universities in America or in the UK, or scholarships here, or apprenticeships. And I think my career's evening was, well, you could either be a doctor, be a lawyer, or go into the city. What do you want to do? So just about everyone I knew went into the city. The job at Lloyds Bank Treasury Division, which was a foreign exchange part of Lloyds Bank, and the rest is history. And it was a case of, I joined an options company and became the youngest ever qualified options trader, and then just decided that I wanted to go. And I was approached by a bigger bank. I think I was quite surprised that I was so young going to do that job, and I think there was a lot of doubters saying I couldn't do that. So of course I can do that. So I went and did that. And then I was asked to go and work for another bank because I did such a good job there, and it just seemed to be, as soon as people think I can't do something, I have to go and do it.
And then I suppose at the same time they're also high stress jobs and environments anyway, so you're also getting that resilience piece there. That, like you said, that going 100 miles per hour, and I think that can be quite addictive, right?
Yeah, but I think in a lot of what I did as a trader was I took on positions or investments that were sometimes took weeks, months, and sometimes were attritional for weeks and months on end. So you could lose money every day for 3 months just trying to build it for one particular event that you thought was going to happen at some point, and then you start sort of coming out of that attritional 3 months, and I think that's probably stood me in some decent stead for slow moving businesses that we try and work with, or the money running out in the business, or funding rounds being difficult and challenging and slow. And as soon as if you can't weather those storms, and you can't show, as soon as an investor smells you're desperate, the conversation's finished. As soon as anyone you're talking to about your business can see that you're struggling or in trouble, or cash isn't quite where you think it is, then that's not a good place to be in.
The blood's in the water, right?
Yeah, exactly. Even if you are under unbelievable strain and not making money, you can't close in restaurant, you have to be able to keep your head well all around you losing theirs.
Well, it makes sense, right? I mean, it's a sign of good leadership that despite what may be going on behind the scenes, that you can keep a level head and inspire a sense of calm around you to continue to motivate people and keep them pointed in the same direction and getting the job done, right? So I totally get that from an investor's perspective, that's a trait that is incredibly important to see. That if you see someone flapping and causing the whole flock to kind of flap too, that's not a good sign, is it?
Yeah, and it's really difficult to do it by yourself. I
Right.
can't just, as a founder, you have to absorb a huge amount of pain and a huge amount of information that you may not necessarily be able to share with your senior leadership team. I have a very strong senior leadership team. There are 4 of us, so 3 others who I trust implicitly. We know everything around what's going on with the business, to every detail that they need to see for their day to day, and some of the things that they don't need to see, and some things they don't want to see, so they can focus on the areas that they're focused on. My wife deeply understands the pain and the difficulties and the effort that needs to go into founding a business. So does my father. My mother was an entrepreneur too, so she's a good sounding board. And there are a couple of our non-execs and some performance coaches around us. So I tried to create a network, and one that I was born with, supports me with all of the difficulties that face a business like this. We've still got a lot of challenges ahead of us and hurdles we need to jump, and I can't imagine that any level of comfort is going to fruition for some years. But it's the team. I mean, the team is my team's phenomenal, inside work and outside of work. If you want to call people outside, it's not. It can be very lonely, but thankfully I'm not doing it by myself necessarily. Yeah.
Sounds like you've got a great support network, right? But before we wrap up part 1, what's next then for Wagonex? Like you touched on there what could be sort of on the horizon in terms of, maybe delivering you some comfort, whether that's an acquisition, a merger, or and like you said, the various things that are on the horizon. But do you have a plan like that? And maybe obviously you necessarily can't share it, but do you have something like that on the horizon, or even more broadly, like what are maybe some exciting things you can share about Wagonex as a company and what you're doing in the next few years?
We're doing that now or in part two?
We can do that now. That's fine. We can stop halfway if we need to.
One of my great now friends and advisors, and sort of being this sort of fairy godmother arm around the shoulder from an advice perspective, said to me almost on day one, "Where's your exit?"
Right.
So what do you mean? So where's your exit? Where's the path to profitability, and where's your exit? Ever since then, every time I speak to him, every time we're looking at this, I think it's the path to profitability. So the path to profitability keeps nudging. Obviously, the more money you raise and you push, hire more people, cash burn goes, increases, path to profitability moves. So I've always been mindful of where the exit's going to be. But even if you're mindful of it and you're pushing for that path to profitability, it does take quite some time to form. You look at all of the investment decks you're ever likely to see in path to exit. Okay, it might be a trade exit, it might be private equity, it might be IPO. All of those options remain open. We do have a preferred option, which I probably won't go into too much. But what I would say is that we work with 6 or 7 major industry players that probably, that could easily and probably should buy a business like ours, knowing how their businesses are structured and the bits that they're missing. So I think that anyone looking in, seeing that the companies that we work with would see that as a probably reasonably good place to begin. And within those 6 or 7 players, we have 4 or 5 of them that are really looking to accelerate what they do with us this year and next. Some household names in different territories, not necessarily in this country. So we've worked extraordinarily hard to get the list of sort of our portfolio of companies we work with, and we constantly talk to the team about how important partnerships are. We've got contracts and partnerships with companies that, if we were to maximise one particular partnership out of 6 or 7 potentially large ones, they would help us get to all of that, get to our 3, 4, 5 year targets by themselves. So do we need? Are we better spending 3 to 6 months going out trying to grow the pipeline to be able to show a VC investor that we've got a really, really interesting and expansive pipeline? Or are we better off spending the next 3 to 6 months maximising 1 or 2 of our global partners, and in 3 to 6 months time being able to turn around to an investor and say, well, actually, our monthly ARR is north of 6 figures. Exciting. It's not quite where it could be. We know what SOM is, and this is what our ton could look like. And it's quite a different conversation and quite a different way to look at it. So I think this industry and what we're trying to do in this industry lends itself to working very closely with a handful of partners that can make an extremely big difference to your bottom line.
Interesting. Okay, well, look, let's wrap up part 1. So, but following this, I've still got a ton of questions, I'm afraid.
Awesome. Yeah, it's great.
So yeah, we'll jump back in. So for those listening, watching, we'll be back in a few days on a Wednesday for part 2. So this will be the end of part 1.
Thank you for listening and or watching. Subscribe with notifications turned on to get notified when part 2 comes out. While you wait, please join in the conversation in the comments below.